It's Skill Saturday, and the topic of today is one of my most favorite statistical and volatility-based indicators, which is the BBWP. The value in understanding what something like this can do is that it will give you a statistical bias as to when things are most likely to expand or contract. Expansion is, basically a reference to very violent, volatile, very violent price action, whether it be to the upside or the downside. And contraction is quite literally the opposite, when you expect consolidation, boring times, what we've been witnessing very recently, actually, as this video is being recorded in the middle of September of the year 2023. So first things first, I need to explain what volatility actually is. So volatility is the rate at which the price of whatever asset that you're looking at increases or decreases over a particular period. The more, Oxford definition would be volatility is the dispersion of returns, essentially. Also, we need to go over the definition of percentile. Percentile is a statistics-based word, and percentile essentially refers to the data at which your current read is above. So I think this will make more sense with an example. So before we actually get into, the BBWP right here, just percentile, for example, I'll bring it up. If you are at the 99th percentile, that means that your score is greater than 99% of all of the other scores. That means that only 1% is better, basically, and vice versa. If you're 1%, you're only 1% better than, the bottom 1%, and 99% are better than you, or higher than you, I should say. It's not necessarily better, it's just higher. So that's how you can understand that. All right, okay, just referencing my notes over here, we got that definition, we got that definition. Now on to the BBWP. It's a 100% free indicator, by the way, on TradingView. You can find it here. Just go into the indicators tab, type in BBWP. It's by the man himself, one of the best out there, Mr. Caretaker, one of the best and most consistent is what I'm trying to say. It looks like some other people have actually made interesting spin-offs of this, which is cool, but this is the one that I'm going to be using for this particular demonstration. Currently has about 2,400 likes on TradingView, which will probably change, as time goes on. All right. There are two parts that you need to be aware of with the BBWP specifically. It is going to be, one, the BBWP itself, which is this multicolored changing line here, and then two, the moving average, which is this white line that follows it around. Now, for the purposes of this demonstration, I'm running default settings, which I almost rarely ever change from, which you might find value in changing, but for, again, the purposes of this demonstration and for what I use 99% of the time, it is this. Price source closed, basis type SMA, length 13, look back 252. The reason why the look back is 252 is because there's 252 trading days within the year. And you're going to be saying, Crown, what the fuck, man? There's 365. Yes, indeed there is, but there's only 252 in the real trading year, which is, your business week, I guess, where traditional markets do trade. So that's why I want it based off of that, basically. All right, so we've gone through that. Now, the next most important thing to be aware of with the BBWP is the extremes. We're most interested in when things are at extremes, whether it be to the upside or the downside, on this indicator, not necessarily on price action. Again, volatility is direction neutral. It will give you no bias on direction, none at all. It doesn't fucking do it. We can use other tools for that, obviously, which we'll get to later, but BBWP just tells us when things are most likely to move versus when they're most likely to not move, basically. And when things are generally very high, and when I say generally very high, I mean anything especially above about 85 to 90 percentile as kind of like, putting a number on it. That is when I consider volatility extreme, and things are most likely at that point, statistically speaking, to go into a contraction phase. You can kind of understand volatility at its extremes in the same way that you might understand a heart rate, for example. When your heart rate gets super high when you're doing some sort of an activity, and then you stop, it comes down. But it can only get so high and stay so high for so long before it must come down. Or your heart explodes and you die. So there's that counterpoint as well. Yes, but you can understand it as like a heartbeat in that fashion. It reaches its peak, and then comes back down. And on the other side, you do have the extreme low version of volatility, which is when things are basically extremely boring. You've probably seen this or witnessed this if you've been trading Bitcoin specifically in the last few months, where it basically just goes sideways. And so when volatility is below, I would say anything below 15, maybe even 20 percentile, that is considered very, 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 very low. And meaning that the moves overall are very minuscule, and we're generally looking at a consolidation phase, which naturally will lead to an expansion phase. So it tells you two things. When things are trending down, especially with the moving average, it's still more likely to consolidate. But as you can see right here, when the BBWP itself pops up above the moving average and they both having a positive slope, okay, things are more likely to actually move outside of the current range. So that's how you can kind of understand it. When it gets super high, you're looking for it to cool off. Basically, the end of the move, big explosive move goes into a consolidation. And of course, over here on the downside, or on the other side, I should say, first you contract, have a major massive consolidation, which leads to a humongous explosion, where price action becomes extremely violent, breaking the prior range. All right. Okay. So we've gone through that. That is actually the overwhelming majority of what you need to be aware of with this indicator. So what I'm going to do now is I'm going to go through a few examples. This is just a 4-hour time frame on Bitcoin. I did make a quick reference there to the interplay between the BBWP and the moving average. Typically speaking, you want to see them both moving in the same direction in order to really look at that as like a high probability play. So if they're both moving down, we're going into a contraction phase. If they're both moving up, probably looking at expansion. In fact, this would be a great example right here. Bitcoin goes into a pretty significant contraction phase throughout all of this price action right here, essentially. And you can see the same thing on BBWP right here. Let me actually pull back a little bit more. I realize you can't see that. There you go. And yeah, there's a few spikes here and there. That's fine, but nothing even above 50 percentile. So nothing really out of the ordinary. Although you do have, small moves here, but that's exactly what it represents. And then at the end of this consolidation, what happens? Volatility explodes right here, starting right here. And price action gets its biggest move that it really got in a couple months, actually, from June to August right here. And then it basically gets to, I would call this extreme highs. Yeah, definitely. It's at about 98 percentile, just above 98 percentile. And what do you know? That marks the bottom of that particular move before another sideways consolidation. You can see that price action starts to go into a full-on contraction phase right here. Again, sideways, sideways, sideways. Then enters into the extreme contraction zone right here. And once that happens, things are most likely to explode. And we get another move right here. Very short-lived in this case. It's not going to be perfect. Doesn't mean that all of them are going to be, massive ones like this one. Well, I'd say that's relatively massive to what we've seen in the past couple months. And then same thing again, of which Bitcoin goes into another contraction phase right here. And now expanding. So do we have something new to be looking at? It does look like that. Yes. So that would be a few examples of what you can kind of see with this long term. I'm trying to look at some more interesting pieces of price action. Maybe we go to, that's why I'm on a 12-hour right now. We go to a 4-hour. I think a 4-hour is going to be a little bit more responsive here, seeing as these moves are really only lower term time frame based thus far. And this one's actually really good, in fact, now that it's zeroing on it. So you can see, again, contraction phase coming into here. Boom, big explosion of volatility as this one does test the lows. Once it gets towards those really high percentile regions, it does essentially find the low of that move actually right here on that extreme read. And then this one actually maintains its volatility, pops back up. Again, that is the direction neutralness of this one, and then actually does go into a real contraction phase where it essentially goes sideways, sideways, sideways for a while until it gets its next major move, starting right around here actually. And it does start to really trend to the upside, as you can see, hitting some extreme reads on the other side, thus marking the highs of this particular move that we did see in June at around 31,500 before going sideways for quite some time after that. So that would be a few more examples of how you can use this. So we've gone through we've gone through a decent amount now. I think what a good thing to be doing now would be to see what other things we can use with this to give a bias on direction. Because if this gives us a bias as to when things are, going to be potentially moving versus not moving, consolidation, it'd be good to then match that up with, okay, well, can we get some sort of a statistical edge as to what direction this might be going? And for that, we can just use something very basic here. I will just bring up a stochastic oscillator in the bottom pane. And this one, let me actually just see, 14, I'll run that one. And we can see right here that generally speaking, whichever direction the stochastic oscillator is pointed is going to kind of correlate to the direction of volatility expansion. So in this phase right here, where again volatility was very low before this expansion, stochastic oscillator was down right here, and what do you know, price action did move to the downside upon expansion. So not bad. It's not always going to work like that. Obviously, there's going to be some noise in these, but you can get a general idea of how these things work. Same thing over here to the upside, starts to expand a little bit. We have a slight twist to the upside right here. Boom, very short-lived move to the upside in this case. Unfortunately, this price action just really doesn't give us like too many opportunities to really showcase something like this. Perhaps this one would be a good one right here. We do see yet another period of low volatility coming off of this consolidation. Stochastic oscillator starts to move to the downside right here, and what do you know, price action follows through right here. Boom, reaches its low, reaches extreme volatility, reads as well, and then actually crosses the upside. And on this next spike to the upside, we see both of them expand before a real contraction phase, actually, which actually does happen a lot on reversals. In fact, just like a quick little tip with this, or something that I've noticed, is that on major reversals, you typically see two extreme reads on volatility like this. So first extreme read is going to be going to be like the blow off top, or in this case like not the blow off bottom, but you know what I mean, like a culmination of a move to the downside. And then the next one is actually the reversal right here, that we do see soon after that. Same thing right here. Again, volatility starts to expand. The BBWP gets above that moving average right here on a low level. Stochastic oscillator starts to move to the upside right here. Okay, nice move to the upside, as you can see. Now, of course, you don't need to use a stochastic with this. You could use other indicators, doesn't really matter, or whatever your momentum oscillator is of choice. That'll usually give you some sort of a bias on direction. But the main point here is using the BBWP and getting the biases on contraction versus expansion. Now, realistically, understanding volatility is very important, for all different types of trading, but it's going to be most important for options traders. So if you're not trading options, is it less important? I don't know if it's less important. I don't think that I could personally live without a volatility indicator, at least somewhere on my chart. But I would say if you're an options trader, it's not just like extremely nice to have. It is now a must. Extremely nice to have. You know what I mean? And why is that? Because when volatility gets extremely high, you can start to think of selling options. When volatility gets extremely low, you can maybe think of buying options or buying spreads, something like that. Now, I won't go into the depths of options because I understand that very few people are actually interested in such things, and we don't even have a good options market for crypto right now anyway. So perhaps another video at a later time. But I think that's going to do it for this particular one. Again, all these indicators that we've used today are free. You can find them there in the TradingView library. I hope that this was in some way valuable. This is, again, one of my most favorite volatility indicators. Yes, indeed, Caretaker is actually at work at creating even more amazing volatility tools, which I'm extremely looking forward to. But for right now, this is still my go-to. And I think we'll leave it right there. As always, I want to wish you the best of the best. Take care, much love, and see you hopefully Sunday.